Right, that we shall finish with cash flow statements and analysis and interpretation. Very important, I did say in the previous video or videos that you can't start your preparation of cash flow statements if you don't know your income statement, balance sheet, ledgers perfectly, including all the notes, and that you understand how they fit together. So if we now go to the cash flow statement, it will be activities 10 to 12. And as you can see on the screen, and the document here in front of me, even though it's small, let me just show you, it will go on the revision pack from page 13 to page 19, and then very important. This is my copy of the ratios. There are, or indicators, there are 18 of them. They might have one or two here that they've added, but it's no use you say, this is in my exam paper and I will use it then. I'm just going to quickly show you, but not neatly. I'll have to print myself another one after this. Take highlighters, make notes, so that when the exam starts, you know how to use it. For example, these 6 up here, they are my profitability ratios. And I know that I must have the income statement to do them, and I have to know how they all fit together. The total assets to total liabilities next, that's on its own, that's solvency. Then these ones from here, let me just find my place carefully, I'm just roughly showing you, would be the liquidity indicators. And I have to understand that in the balance sheet, where do I find all these figures and how do they go together? For example, the current ratio and the asset test ratio link together. The rate of stock turnover and the number of days or months stock on hand, these two, they go together. The creditors payment period and the debtors collection period, they link together. Very important, actually. Let me get a different color highlighter. The ones I cannot tell you enough to practice is how does debt equity, which we're going to do, the risk indicator, tie together with this one, which is the return on total capital employed. Now, on that point, if this is the risk indicator, I'll make notes and I'll practice it. But they don't use abbreviations here. So let me just take this pen, even though it's very big or thick. This is ROTCE. Oh, very big. Return on total capital employed. This one, the profit after tax over issued shares, is the EPS, earnings per share. This one here ties together with that one. This is the dividends per share, which can be, we don't use, and this one, dividends over earnings. The dividends we actually give our shareholders over the earnings or amount available. This would be dividend policy, which is in all the last final exams. So do you see how you should use this? So analyze it. Do that first. And then here, this one is separate. This is in the cost accounting module. This is obviously your break-even point. I've missed one because I'm thinking of all the abbreviations. I've actually missed 2. This one here is the ROCE, return on shareholders' equity, and there's one more. I'm looking for NAV. That one, shareholders' equity, do you see? And don't say because I'm a teacher I know this so well. I have practiced it so often, and I have made sure that I know the link between each one. Please don't just see it as a tool with which you can then answer the questions. You have to still know them all and see how they link together. Okay, let's get this cash flow video done. We start here with, like I said, activity 10, which is basic knowledge of cash flow. I have just shown you here 3 of the answers. And for example, operating activities are income earning. So you should be thinking now of the income statement. what part of the profit or the income converts to cash, and that should be that is also the main reason for starting the company. Okay? Then the investing or investment activities means, how do I spend money on getting infrastructure or fixed assets? Or what did I get for selling those fixed assets? This also includes fixed deposit. And then the third part would be financing activities, which is, where does the money come from? How do I fund all these assets or shortfalls? And that would, of course, in a company be for shares issued or loans. And if you just look at the first one, I have to just get my laser pointer ready. If you look at this one, which is operating activities, like I explained, it will have to do with income, in this case, sales to a debtor. If you then look at the next one, purchase fixed assets, you have to now know we are talking about investment activities. And the last example I've just highlighted for you would be this one. The company raises funds by issuing new shares. Of course, that is then financing activity. So do activity 10 on your own. If we go to, and I just want to find my own page, activity 11.2, you will now notice how many times we have done fixed asset notes. I think we've done it in just about every video. In this case, let's see how we're supposed to finish this. They want us to, and they love doing this, they give you the note and then they say, you work out A, B, C, D, etc. Now, A is very easy to see that it must have been sold for 500,000 Rand. So it decreases. If you thought land and buildings you can only be tested on increase, you're wrong. There's an example of disposals. Next, they tell us that a vehicle was sold at carrying value on the last day of the year. Now, obviously, when you read sold or asset disposal, you should be ready for something more difficult. When, however, they say on the last day of the year, you can actually now, which makes it easier, write off depreciation 20% diminished balance method. Now look at that. If you calculate this quickly, what is 900,000 minus 240,000 in brackets, which of course is that amount, times 20%? Answer B, 132,000. Now the disposals at carrying value normally would now be kind of an effort, and you'll draw a timeline and count your months, but can you see, and please remember, if you now are spending time trying to do this, you're wasting time, because you should immediately notice in this table, this column, C is the only missing amount. So it is just plus and minus. You'll take your 660,000 minus 132,000, get a total, and see why that is different from 446, and the missing minus, therefore, 82,000, and done. The equipment, if I reverse one step, is just number D. And because there's two question marks there, you might think, oh no, how do I do this? Please concentrate that there is, and notice that there's no disposals. And in a previous slide, in a previous video, I showed you that if there's no disposals, that amount accumulated plus depreciation equals the new accumulated. I'll repeat, 52,500 plus 55,500 will give me the correct answer here. I'm just going to do that because I see there's a step I'm skipping now. Can you please look at the calculator? What I just said is 52,500 plus 55,500 equals the new accumulated. I hope you can see that. That's 108,000. And I'm going to subtract 108,000 from the cost price of 258,000. And if you now go back to the slide, there's the 108 and there's D's answer, 150. Okay, go over this in your own time, and there's a reason why fixed assets are all over the place. It's something we do want you to please revise and do very well so that you do not waste time when you do this part of the work. Okay, we are on operating activities, 11.3, which is the top block or the first of 3 blocks of the cash flow. There's a reason why I put paid, paid, paid in red and why the brackets are there. When you pay, cash flows out. Let's go over this. I've shown you from the income statement info, in yellow, tax. And then, of course, from receivables and or payables, SARS income tax. Which order do we do this? You start with last year. If it's a payable, we need to pay it. There's your minus 27,500. Income tax is an expense. Expenses must be paid. Minus 375,000. And then you ask yourself, what does this mean? If we end SARS income tax with a receivable or debit balance, they owe us at the end of the year. How come? We overpaid them, and the answer is 425,000 rand. On that point, I have to just say this is again my method. I prefer, when I do this part of cash flow, to use the minus for cash outflow. So if you listened to the words I used, I said we paid the amount at the start of the year. Then we have to pay income tax, but we always either over or underpaid. In this case, we overpaid. So I've said paid 3 times. That's why I have 3 minuses. You will notice your teacher's method might be different, and also memos might be different. It depends on your own choice. And then they can in a memo say plus, 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 where I said minus, 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 but we get the same answer. So I explained to you my method, but I have to be consistent. So I always do it like this. You'll see the same when we do dividends. Okay. Dividends paid. For that, I need other information. There's my shareholders for dividends amounts, and there's my dividends interim plus final amounts. So again, start at the start, which is the start of this financial year or the end of last year. I owe shareholders 385 and then I pay them. In my method, minus 385. Then you go, same as with tax, to the expense. Now, 825 is the total dividend amount. If I say I paid it with a minus 825, I must always remember, no, this final amount, 450, which forms part of that amount, has not yet been paid. So I correct what I said by going plus 450. So what does this mean? I paid 385 last year's final. I need to eventually pay 825 in total, but the 450 has not yet been paid. Answer 760. Answer top of the block 625,000. Again, these are work with marks as long as you show all your calculations. We're moving on to the investing activities. Now here I did not do this one because we have done the fixed asset note. So you do this yourself, but in red I indicated that purchase means pay, means bracket or cash outflow. Financing activities, let's have a look. It says here, in the info, 1 November, new shares issued. That's easy, money in. But repurchase, which didn't happen in this example, should always get a bracket. Then I just need to show you the loan information, very easy. But now look at the pluses and minuses again, my method. I always would say this year minus last year, which means if I now write down 2 million minus 1,375,000, I'm not thinking cash yet, I'm thinking loan. And you can clearly see that the loan increased. And then what you think is, if I increase a loan, I am borrowing more, so it's money in. If my loan decreases, I must have paid it back, so money out. So in this case, more money borrowed means cash in. And that is why the answer is 625,000 positive, total of the block 925,000 positive. So those would be the 3 blocks: operating, investing, financing. And then what's the bottom of the cash flow? This. Now, this was again easy. There was no bank overdraft. So if you have 229,500 now, and at the start 207,500, you just show there, please, all your calculations shown that you must minus the 2. When I reverse in any place, if it was added when I came downwards, then I must subtract it again, and there's your answer. Okay, I did also show you in this block that you have to add your 3 blocks together, which was the previous 3 slides, to again get 2084. So I double check by working back up to that point, and then I go from the top, the 3 blocks, and I also get this point. You can always do this cash flow, not split up like I did obviously in the 4 different slides, but on your paper below one another to see the big picture, or just look at the memo. I have put a red circle there, or an oval. Always look out for bank overdraft under current liabilities, and then please remember an overdraft will be a negative. We are going on to activity 11.4, where they now ask me about decisions. So this is a bit more theoretical. And it says, if I can just give me a second, get to my page. It says, give a reason for John. Let's see. Oh, there it says Jan. That must be a translation. I think the Afrikaans said Jan. Okay, fine. The English says John. Why he criticizes the directors for issuing more shares and selling fixed assets. Now, you should understand that the shareholder, John, would not be happy if there's more shares because it's less money for everyone to go around. If we get dividends now, there's more shareholders, so the existing shareholders cannot get as much as before. What would the director's explanation be? It's better to raise funds through share capital than borrowing money, because if we borrow, then we must pay interest. So there's always, like they say, 2 sides to a story, and you must understand. Then if we sell fixed assets, my first point of view would also be like John, that it prevents the company from benefiting through capital gains, meaning if I had land and buildings, it increases in value. If I have lots of equipment and new vehicles, I can generate income. The reason, however, for the director's decision would be if we have unused assets, like vehicles just standing there, but we still have it as an expense for petrol and maintenance, or the machinery or the extra old computers are not used, then it's unproductive. And we have maintenance cost on old assets. Even, for example, land and buildings. If the building is too big, maybe you own the whole building, and now some of the shops have closed down and they've moved out, and now you must have noticed often if you walk in town or so, that there's a building with a few empty shops. So then we are having to pay the rates and taxes and maintenance, but it is not used, so it's not generating an income for me. Rather sell off then a portion of that land and building so that you only focus on the part you're using for your business. We're now getting to indicators, which is activity 12. And activity 12.3 specifically, let me see, we're jumping a bit to the 12.3, the rest you can do yourself, says calculate A to E. Now, I have shown you my formula sheet, and I've just quickly tried a little bit with colors to show you. The first thing I would notice is that there's 5 that go together. You must recognize them as liquidity. Then just these ones that I find so important is the debt equity, which is the risk indicator, together with the return on capital employed. And then you have to understand that this is gearing. positively geared. Great. We are getting a return much higher than the bank charges us. So let's see. How do we calculate the asset test ratio? I don't even think it's necessary, but I will go over it quickly. You can do it at your own pace. You find it in the, like I said, this is balance sheet info, and I know my balance sheet perfectly, therefore I'm ready to do the ratio. So asset test, there's the inventory, I've removed it. How do we get rate of stock turnover? Well, you have to know that cost of sales comes from the income statement, but stock comes from the current assets. And please notice when you have to say times per year, percentage, days, etc. And also notice when it's average, which is 0.5 or half times the two together. This is the one that I said is so important. Do we understand that the risk in this case is relatively low because my loan, long-term loan only, forms half of my equity. So the shareholders have contributed more than what the bank has contributed. And this company, because the risk is relatively low, 0.5 or below to 1, can make use of more loans. The net asset value, the NAV, I've shown you in a previous video that 74.5 cents as the answer to this net asset value must be compared also, and you must be ready for that, to other values like, look at the bottom here, repurchase 95 cents or market value. So please notice the value must be compared. You must know the 5 different values, but most important, NAV and market price. This is what I said on my sheet that is called Roche, and the abbreviations are important so that you can also classify them for yourself. If we get 18.5%, which you can calculate for yourself, there's average again. What would the shareholders think about this? Well, the shareholders will like 18.5% because what is their alternative? If they don't invest their money in shares, they could have put their money where? In an alternative investment like at the bank where they'll get, it depends, you don't have to know the exact rate at the moment, but let's say plus minus 8% on investment. I'm sure it has changed again and I'm quoting the wrong percentage, but that's why we say plus minus. So in other words, they get a much higher return Roche on their shareholders' equity than at an alternative like the bank. We are also looking quickly at 0.4 and 0.5. When they go here and they say explain, there's a certain order in which you need to explain, and it's absolutely about also the marks it count. And it says here, explain about satisfaction or not, and quote the indicators and of course the numbers. So look at this. This is should be satisfied. It's like a yes or no question. Then you quote the indicators. Now you get a mark for knowing that their satisfaction on dividends and earnings and returns are these 3. They are asked together often. DPS, EPS, Roche. Now there's an improvement, another improvement, and a big improvement on return. So there are the words exceeds returns on alternative investments. The candidates who know a lot wants to write a lot mostly. Do you see that you must not write anything other than that? That's a 1 mark. 2, 3, 4. The trend, 5, 6, 7. And the ratios, or the numbers, the figures, 8, 9, 10, and maybe 11. Okay, I've overdone it a bit. It won't count that much, but I'm just trying to show that we don't need full sentences. We've got the indicator, the trend, and the numbers. Liquidity, like I said, there's 6 liquidity ratios, but they said pick 4. And here we've picked 4. Now, they don't give you the names there, so the fact that you know liquidity would be current ratio, asset test, stock turnover, debtors collection. That's definitely 4 marks. And here's the trend. Maybe worsened would be better, but in this case, that's not bad, so decrease is fine. And then here the word improved, and you quote the figures. So that is the only way to answer this. And then, because they say comment, they mean also maybe in general, and then you give an overall comment. And we always comment on stock, in other words, that drop there, that if stock is not sold quickly, then they might have a problem. Like we definitely have so many shops experiencing now during the lockdown period. Their stock just does not sell, which means no cash flow. Okay, we've reached the end of our 5 videos, and I hope it helps a lot. Don't just do this once. Go over it, pause, learn the form. If you find that something is explained here but you have totally forgotten, go back to your textbook, go back to your formats, and then try again. And I wish you only the best, and please remember, this is only the start of winter, then spring, hey, yay, the sun will shine again, and then summer. And you only write your finals in summer. There is time as long as you start now.